Good morning, traders and investors. Roger Scott here, senior strategist for The Trading Pub. It's Friday, it's September 29th. It's actually 1 month before my birthday. Look at that. People are asking me what I want for my birthday. Funny t-shirts. Get me funny t-shirts. It's about 7:50 in the morning. The market's going to gear up to open up in about an hour and 40 minutes to be specific with you. And today we're going to cover Algo Corner, review for the week, all the threats, opportunities, trend lines, all the good stuff, Now, right now, before I begin, make sure to subscribe to the YouTube channel. It's Roger-Scott YouTube channel. I post my videos there. If you click the bell, you'll be notified when they come out before I even post them on Telegram. If you want to get them on Telegram, and I suggest you do because there's a lot of good stuff coming on Telegram, a lot. Hot, actionable trades. Just go to rogerscott.com/Telegram and sign up. Most importantly, if you have a question, post it below this video or send me an email. I always respond. Roger@rogerscott.com. And you can find the link to my VIP room, which happens at 11 a.m. today, above or below this video. Wow, it took me a minute to do this. That's all it should. All right. The Nasdaq is up 76. That's beyond random. The Dow's up over 100. That's beyond random. There's something going on today, and let's get into it. Now, first things first. I want to show you what algos have been hitting hard this week. Utilities and consumer staples. Actually, consumer staples got a bid for the first time last week, first time yesterday. But overall, it's been very tumultuous week. Typically, utilities and consumer staples go up when the markets are down. But with energy moving higher, it's very confusing because honestly, we didn't really get much of a bid from the market overall. But some of the assets like financial, they were able to move a little higher yesterday. They got a good bounce. QQQ got a bounce, and there was more of a congestion around here. We're already yesterday at a high from 4 or 5 days ago. But if you look at consumer staples, they barely could get it up yesterday, and utilities closed down. So there's a lot of selling pressure on defensive stocks. Now, you would think with all of this potential inflationary data, defensive stocks would go up. But the truth is, higher interest rates make utilities more expensive and make consumer staples. There's a direct negative correlation between utilities and consumer staples, and also real estate. Now, interestingly, real estate yesterday, this is very interesting. Existing home sales hit hard yesterday. We had a 7.5-year low, basically saying that the real estate market is going south, and we rallied on that news. Home builders rallied on that news. Matter of fact, I have them right here. Let me see if I could find them. I just realized that. Here, right there. Look at that. I mean, were they expecting negative news? They didn't just overcome the last several days. They filled the gap. So I'm going to be watching for home builders because they're showing real sign of strength. Also, retail is starting to come up. We have some retail earnings. Nike, a couple of other ones came out a few days ago. They were better than expected. So we're getting a bid from the retail sector. But overall, the sectors that you want to be in, and there aren't that many of them right now, is potentially the communication sector. That's the only thing that's holding support still. And the energy sector. Man, the energy sector looks fantastic. Now, I don't mind day trading or swing trading all the other sectors, especially if it's a day trade. But if you're going to hold overnight, you want to make sure you have some staying power. So energies is a good place to hold positions overnight, at least for the time being, because the trend is still strong. And think about it. If professional traders are looking at this chart and they're looking to get into something strong, do you think they're going to get into consumer staples, or do you think they're going to get into the energy market? I think the answer is obvious. So a lot of selling pressure in the algos on utilities and consumer staples. And I think that all has to do with the fact that interest rates, long-term rates hit a 52-week high, or bonds hit a 52-week low. This reversal bar yesterday was very solid. This meant business. Volume, a key bar like this yesterday, that's really important. So we may have a little bit of a turnaround. Looking at the market as a whole technically, I'm not loving what I'm seeing, but I am liking what I'm seeing. Technology is already opening up a little bit below. It's almost at the 100-day moving average. That's not bad. Technology, well, I can't say it's looking great, but it's holding this support line, even though with the market cooling off, so far it's holding. That's all I could say there. Looking at the Dow Jones, The Dow was the most oversold and the most weakness, probably because of consumer staples and utilities. It's hitting the 200-day moving average. This is something to be excited about. If we can go above the 200-day moving average, I think you're going to see a lot of buy programs coming in today. If not, it's going to be a problem. So keep your eye on the Dow. The SPY, which is the biggest watched index at this point, is doing pretty well. It's above the 200. It never actually went to the 200. It's right at these support levels. Remember I told you this, there's a very strong support level around here? Well, that support level held, and now we're breaking above the first breakout line. So on the Dow, you want to look at the 200-day moving average. On the SPY, you want to be above 432.60, preferably above the 100-day moving average. And on the QQQ, let's just take a look and see how is it moving. You want to also be above the 100-day. But notice this support level right here, it held really, really well. Support and resistance line, major support and resistance lines have a little bit more of an impact than moving averages, just so you know. But relative strength is moving in the right direction. Hopefully today's Fed data, which I'll talk about in a bit, isn't going to roil or screw the pooch, if you know what I mean. Tech sector-wise, let me just tell you where the sector action is right now. Now, over the last 3 weeks, energy, communication services. Remember I say they are the holding up the best, followed by healthcare, financial, Dow, mid-caps, retail, consumer staples. But let's look over the last week. Energy, home builders, retail, mid-caps, communication, Russell. Aggressive stocks have been moving up in the last few days at the expense of consumer staples, the Dow, blue chips, utilities. So the market's really mixed. Blue chips started outperforming as soon as the market started breaking down. And as soon as the market started breaking up, all the speculative names started coming up. The common theme here is energy never moved from the first spot. Never moved from the first spot. Look at that. Every time period. So energies is definitely where you want to be. Everything else is really moving around quite a bit. So be careful. Now, we have Fed data today, and I'll get into this in a second when I do the broad review. But we've got personal income and outlays today. The biggest number, please don't let all of these numbers sway you. There's a lot of numbers here. The biggest number that the Fed is looking at, and Wall Street and professionals are looking at, is the consensus. They're looking at the consensus year to year, year over year. If the number's higher, then the price index is going higher. That's inflationary. We're hoping that the number is below 3.6, 3.5, 3.4, 3.3. Anything lower would be good because that means it's not as inflationary. And then we have the core price index. We don't want the expenditures to be so high. And then with the core price index, it's supposed to be a little bit lower. So these two, hopefully this is lower, and hopefully this is just a hair higher than this, not too much. We want to see expenses. We want to see lower expenditure level. We don't want to see too much of an increase in expenditures. And we want price index to also remain low because that would say there's not as much evidence of inflation. But this is a big report. Now, let me put everything together for you. And that report is coming out in about 32 minutes. It'll give you plenty of time to prepare for it. All right. Dovish-leaning remarks from the Fed and report of a potential meeting between U.S. and China boosted sentiment. Yet don't hold your breath with China. While investors looked ahead to a reading on the Federal Reserve preferred inflation gauge. That's this right, these two numbers right there. I've laid it out for you. Mega caps like Meta, NVDA, we have options that are expiring, I think in Meta today. NVIDIA, they did really well. Peloton signed a deal with Lululemon. I'm actually very curious when this news started coming out because I know some large traders traded ahead of this. So it'll be interesting to see when the news came out. CarMax plunged. They weren't doing so well. I'm going to take a look at it right now. Micron actually didn't do so bad. We day traded it yesterday. Did pretty well for the most part. If you made money on Micron, let me know. I did tell you during the room before we hit our profit target yesterday that it started losing momentum to the market, and that would have been time to get out. U.S. Department of Commerce third estimates of GDP came unchanged. Not the worst thing in the world. August pending home sales plummeted to their lowest level since 2020. Record decline. And what did they do? They rallied on that news. I have no idea. Jobless claims came out fine. 204 versus 215. Nothing to talk about there. Now here's something to talk about. Goolsbee said Thursday that policymakers were at risk of overshooting on interest rates by putting too much emphasis on the notion that substantial job losses are necessary to curb inflation. The Fed has the chance to achieve something quite rare, Yeah, we'll see about that. To defeat inflation without tanking the economy. Really, the economy hasn't tanked. I mean, egg prices are low, right? Milk, everything's affordable. Gas prices are not $5 a gallon, right? The economy's not tanked, right? This is why listening to these morons is, folks. Does anybody here think the economy hasn't tanked? He does. Oh, don't get me started. Goolsbee also said, Barkin, I'm just sorry, it's just funny. The economy tanked, buddy. Stated that policymakers have time to determine whether further measures are required to combat inflation. Yeah, because they don't know which way the wind is blowing. And he suggested that insight from labor market could be valuable in this regard. While Goolsbee say we're putting too much pressure on the labor market. We have time to see if what we've done enough or whatever, there's more work to be done. See, I agree with Barkin. I don't agree with Goolsbee. I think Goolsbee's on something. There is a 17% chance of a 0.25 basis point rate hike. We went from 39% back to 30 with the bond market rallying yesterday. I don't know if that will hold. I'm actually thinking this number should be closer to 50, but that's just me. Okay, today all eyes are on the U.S. core personal consumption expenditures, the Fed preferred gauge of inflation. They're looking at, I'm not looking at month over year, 3.9% compared to 4.2%. It'll be very, very interesting to see if this number goes down and stays down. It would be great to see this number go down and stay down. Hopefully that will happen. Europe is doing well this morning. They digested good news. Luxury stocks are leading the market. I don't know what that's all about. It's weird, you know. We have the worst real estate market in 7.5 years, and real estate home builders go up. Gains in luxury stocks during a potential recession in Europe are going higher. I don't know what to make of this. This is just craziness. Are leading the overall market higher after Bank of America raised their view on the sector. Now, why would somebody raise luxury goods right now when the Fed is doing what they're doing? That makes no sense fundamentally. And these are fundamentalists. Don't get me started. I speak my mind. The Nikkei closed just below the flat line. They're not doing so well. They lost more than 4% in the third quarter, making it the first quarterly decline since last September. It's time to raise rates in Japan. If you keep lowering rates or keeping what you're doing, you're going to be in a recession for another 29 years. Oy vey. Meanwhile, Hong Kong stock surged Friday. Optimism that China and U.S. may be meeting once again. I wouldn't hold my breath on that one. And that there's a holiday. Now, let's talk a little bit about what we could be seeing this morning in terms of day trading stocks. Nike, I'm not a big fan of Nike because here's the problem with Nike. Nike's in a very strong downtrend. And the market's strong today, and this stock is strong. So I don't feel good about giving you a fade trade, even if this thing falls apart. But here's what I'm going to do. If the market turns down, and if Nike goes down to 90 to the 30-minute, watch for the first 30 minutes of the market, 10 a.m. Mark the low on Nike. I don't think it's going to happen, but mark the low on Nike. And if the market turns south, and if we break down after the first 30 minutes of the day, I would go short. Don't think it's going to happen. The odds are maybe 20%, 15%. But notice the 30-minute low on Nike and only go low. Don't go long because we're below the 200, the 100. There's no staying power. If we're wrong, we're going to be stuck. You don't want to do that. So you only want to take it to the short side if we break the first 30-minute low. That's a big if. Otherwise, don't do it. Other stocks that I'm looking at right now, I'm looking at NVIDIA. NVIDIA's looking really, really good here. I may want to day trade NVIDIA because it's very, very strong. I would want to buy it. I would want to buy NVIDIA. Here, let me show you where. I would want to see the first half hour to the upside broken. So opposite of Nike. And NVIDIA, we're looking for the first half hour to break higher. And then we want to go to the upside. And with Nike, we want to go to the downside. Because if this turns against us, we can defend this position for a couple of days, as long as we're above the 50-day moving, the 100-day moving average, and above the 8-day, by the way. I just realized that. And if it goes above the 50-day, I'm going to sell a call spread and do an iron condor on the weekly option program. I'll give you more details as the day progresses. It's Friday. We got to be very nimble. And this report is going to have a major, major impact on the market. So we've got to be really, really careful. Watch the QQQ and wait for it to hit the 100-day line. And I think we're going to get a rally out of this. But so far, things are looking better than expected. Now, folks, if you haven't looked at Celeste Lindman's revolutionary, I just call her Celeste. If you haven't looked at Celeste's revolutionary stock market tool yet, don't delay any longer. Delay is your worst enemy in the market. Dive deep into the magic of simple green and red arrows. I mean, I love that signal buying and selling to uncover the hidden dark force steering the stock market. Wave goodbye to endless hours of poring over technical charts, sitting through the latest market buzz. Instead, soak in life's precious moments. Oh yeah, I'm going to do that this weekend, confident that your investments are pulling their weight smartly and effectively. This isn't just some strategy. It's a radical trading evolution. And with Celeste at your helm, you know you're at experts' hands. Click on the link below. Get started now. I'll be giving you plenty of updates today in the Telegram channel. If you like the Telegram channel, if you like the new format, let me know. I want to know. I want to make sure you're getting some use out of it. You have a great weekend. Subscribe to my Telegram channel. Subscribe to my YouTube channel. And I'll see you in the VIP room at 11 a.m. And we'll go through this all live. Oh, yeah. It's like that. Bye, guys. I'll see you later. Have a great weekend. If you're enjoying my services, if you're enjoying my videos, send me an email. I want to hear from you. Roger@rogerscott.com. Bye.